Hey everyone, it's Mozart here. So overall, today is probably a key day for crypto and it will be until the end of trading. At the time of recording this video, important data will be released in an hour. It's probably the most important thing for the Fed supply decision. Now it's the level of employment in America as a percentage. So we are currently forecasting 4.2%. It's really tough to guess what actual level is going to be like. If you look at the history of forecast for this level, the average column, as well as the actual result, you'll notice that the experts surveyed before always got it wrong. It means that the final values are either in the red, meaning they're either higher than the forecast, or in the green, meaning they're lower than the forecast. And it's not even a 50% forecast. If we were just flipping a coin right now, we would be more accurate at guessing than experts. Although the spread here is very small, it would seem to be either 4 or 4.1%. But even then, they often get it wrong. As for me, I can't really predict what this indicator is going to show. But I know for sure what will happen with 90% probability if right here, today in an hour, if the number is green, meaning lower than 4.2, then that will hit the market really hard. And with a very high probability, we will see in the best case scenario, if all the stars align, a retest of that level and a turnaround upwards, or more likely a breakout of the structure and a drop to the height of the structure, which is almost around the mark of $87,000 to $88,000. It will be with a huge high probability if we see a green number. So if we see a red number at the 4.3%, the ideal scenario for crypto would be the bottom with a very high probability. The chances of us at least going back to the 200 moving average, which is $98,000. Most likely we'll hang around here for a bit and then break upwards, filling all these gaps. And this breakout will be key before the update from ATH. And that's if we get a red number. This is what is more likely to happen. And with a lower probability, we will go back to 98% and we'll just be stuck here chopping around and altcoins will pump. Dominance will be falling. Next, if there is a consensus here, according to the table, this is the least likely scenario, considering how often forecasts get it wrong. 4.2%. Well, okay. In this case, everything will depend on how the stock market behaves, how the dollar DXY trades, and how the Nasdaq trades. And if there is a consensus, then most likely for crypto, that will be a positive sign, because all this drop, it was based on the expectation that the unemployment forecast would also be worse than expected. So unemployment will be lower, and for crypto, that's worse. And if there is a consensus, we'll most likely head to 98, either like this or somehow like that. We are going to head over here to test. And technically, according to the chart, there is nothing in the trend here. Absolutely nothing. Still nothing. Yes, I wrote in my Telegram channel that generally the probability of the rebounds is really high. And to break the trend, we need to close above at least $94,700 on the hourly chart. And we did that. And it's not very often, but there is no volume here. This is just crazy money on futures across exchanges. No volume means that short-term traders were wiped out. And now we're rising because there is no resistance. Because here there is a line of 1 to 3 months holders. And over here, those who haven't exited. The buffer zone for those who haven't sold in the last month and they are just sitting on their losses, hoping the price will come back. There is no volume right now, and if something negative happens, we could drop like a rock because there are no support levels here, which is a key point. I already showed this chart, and here are the two main densities. The concentration of money, the first one we passed was around $97,000 to $98,000, and the second one is $93,000 to $94,000. I wrote about it here. And right now we're sitting above it. And if you look at the horizontal volumes, that's exactly how it is. Here you go. This is something noticeable. This density up top and this density we have down down here below. This is the main basic order block. And now, depending on where it goes, this price, after this report, this will determine the next move. The worst case scenario would be if we test this and then just head straight down. And it will be even worse if we close below a new 4-hour candle, below that low. That means below the $90,400 mark. And if that happens, we could be looking at 87 to 88 right here. There is an additional technical picture. We've broken the trend on the upward side, technically not just on the hourly candle. Here is that breakdown, but at the 4-hour candle too. And it also had a structure. We are following the structure, We go 1, 2, 3, 4, and the previous 4-hour candle broke this upward trend. So here, technically, we have a setup for a reversal, and if there is at least some consensus, I'm definitely leaning more towards a reversal. At the very least, a retest of 98,000. Here, there will be either a return like this or a cut. So here we'll fill in the gaps and still head towards a 98,000. So this is what I'm expecting in case of either a consensus or green positive numbers. But even if there is positive numbers, we'll probably just shoot up right away upward without any retests. And this is all for the fundamentals and the technicals. So in the blockchain, we have the number of short-term holders who went to lock in their losses. And basically, it has hit some peak values. Okay, now I'm just gathering information over the last year, and we will see, yes, indeed, it was about $80 million. Yeah, we hit those levels a bit higher or lower. We either bounced off them hard, which is basically happening now, or we reversed. For example, we reversed here, we just bounced here, and we just bounced here, and then we reversed here. And we reversed here, more or less. We reversed here, we bounced here, and now it's not clear what is going to happen. Well, this line is just the range of 80 to 100 million. This is the loss zone for short-term holders. It has been a key point over the past year. It's been a key point of reversal or strong bounce. Next, I show this on the chart in my Telegram channel. Oh, by the way, I share all the trades in the Telegram channel. On YouTube, you will not find my trades. You'll find the link to my Telegram channel in the description of this video. Well, the full day was recorded with a loss of minus $62 million. And it doesn't matter which loss it was, it's important that it actually was a loss. It's rare in bull markets. If we come back a little, we will see that there wasn't a single full day of loss during the correction of January 2024. And there were losses on an hourly basis. I showed the chart in the Telegram channel on an hourly basis. And here, overall for the day without breaking it down by hours. And this result isn't just for the short-term holders, it's for the entire market. As soon as we lock in a loss, even if we are ready to move into a bear market, there is always at least a chance of a serious bounce. And you can see the same thing with the bull run of 2021. There was only one point like this. It was only one day. It was on February the 28th. There was a recorded loss of $243 million. And again, it's not important how much the loss was, it's important that it happened. And the same goes for the bull run of 2017. Basically, there were only 3 days here, but one was a total flop. And all the following days were profitable. And now we got our first loss since the 10th of October. The first daily loss. It's small, but it is a loss. And it's an important wake-up call for the entire market. Well, next is funding. So this is the hourly breakdown of funding without averaging. Funding by the hour. It dropped to zero and even lower January the 9th. It also dropped to zero on December the 29th. And it dropped again to zero on December the 21st. So it's basically fallen 3 times. which is actually normal for the market, for the bull market to drop to zero for an hour. That happens. In 2024, Bitcoin saw a 21% correction. We're consolidating now. It's concerning when funding dips into the negative zone. Here we're consolidating, just like before, sometimes dropping to zero, and then it starts a new trending impulse. It's not good when funding starts to dip into this negative zone. That actually means that market sentiment has changed. There are very few buyers left, very few. There is no strong bias towards buying. Yet we're close, but we are not there yet. And this situation that exists here will most likely determine whether we go there or not. Next up, the percentage of offers in profit. Also not for short-term ones, but for the entire market. We were down by 82.5%. Again, that's very low. That mark has almost always served as a benchmark for the peak of all the corrections. So take a look at 2021, for example. We hit that first value from ATH, and then we don't drop below 80%. As soon as we go below 80%, we tend to stay down for a long time and drop way lower. And the same thing happened after hitting that value from ATH at the beginning of 2024. We dropped to 80 and tested it. Well, we went back up and then we fell hard way below. The same thing happened after reaching ATH at the beginning of 2024. Here we fell by 80, tested well, went higher again. Then we fell hard lower, and that wrapped up a quick bull market cycle. If we look here in summer 2021, we broke through it slightly lower for about 12 days, and the market was more volatile. But this level held up against corrections. This also applies to the bull market before last. Just look at how well this level holds up. Here we broke through it just a bit lower, but it was only for about 1 to 2 days. And here there were corrections of up to 40% on Bitcoin, even a bit more. Okay, next. The average purchase price broke through 1 week to 1 month, and we reached the average purchase price for 1 to 3 month Bitcoin holders. And yesterday we just touched it with the shadow for those who have been holding Bitcoin in the range of 1 to 3 months. So right now their average purchase price is $91,000. Yesterday we hit a low at around, $91,000. Alright, 91 was a low. Basically, we broke through it. And overall, we can say that we tested this line. And it works just the same in bull markets. Here in 2024, we touched and flew up. In 21, we touched here once and flew up. In 17, we touched once here. We touched it again, but there wasn't a bull market yet. And the floor hadn't been broken. It works really well, and if we break down like we did here, that's a huge risk of transitioning into a bear market. And that's why I say that going below is really dangerous. Going below 91,000 is very dangerous, especially to hold that level. We can break through it with a quick bounce. I also wrote about this in the Telegram channel. And if we can't hold that level, that will be very, very bad. Showing that a big capital doesn't see a bear market transition are net withdrawals in the last 2 days of this dump withdrawal spikes in the combined Bitcoin and Ethereum from exchanges. We've seen a surge in output over the last 2 days of this major dump. So the big capital buys Bitcoin and Ethereum and puts it into cold storage. And of course, they're not doing this for no reason. Next up, URPD, distribution of horizontal volumes into vertical visualization. I showed you that chart. So yesterday we hit this level here, $91,000, and we bounced back again, more or less closer to the center. It's called a control point. If we move over here and hold this level, well, the defense is weak, and there's a good chance will hit it, so at the very least, this will be 87,000, which is almost 100% at the very least. And if we move over here and start trading in the so-called Trump zone, well, with a higher probability, we will move away and over here, and this is already closer to the $70,000. And it doesn't smell like a bull market. So that is on the blockchain critical marks. Basically, we shouldn't fall further, and staying in this position too long is also not very good, because buyers get anxious and we need buying pressure, established funding to utilize current liquidity. Otherwise, it exits exchange. If we don't get a rebound in the market, which this liquidity is ready to join, and whether it will be ready or not, the most part we'll find out from these data. Thank you, everyone. This was Mozart. I wish us all good luck, and basically let's see what comes from it. See you later, everyone.